Hello, welcome to Moving Iron Podcast after the bell, Chip Nellinger. Today, Chip, looked like the markets had a little bit of a positive turn here.
Yeah, they did. We traded both sides of unchanged. Spent a lot of the morning lower. They're kind of 11:30 noon Central Time. Kind of had a reversal led by wheat. No real news out to spur that. I think maybe we've digested all the rain that was out in the plains. And now it doesn't look like in the forecast there's any follow-up rains coming. Back to, warm and dry. So adding a little bit more risk premium. One rain's not going to make the crop as many problems as they've had. So they're going to need another rain or two to finish this crop off. Right now there's nothing in the forecast. So wheat kind of led us higher, up 9.5, 9.75 in the July Chicago, 484.25, up 9.25. July Kansas City at 512. Very quiet in corn. There's corn planters rolling. The forecast is pretty good. So as you get in late this week, over the weekend, looks like we're going to continue picking up the pace a little bit on corn planting. But yet, you had wheat higher that spilled over and helped corn. And also there's starting to be more concern about this crop in Brazil, their second crop of corn. They're kind of getting at the tail end of what was normally their wet season there for this period of time, and they're about half on the precip of what they normally would have. So that's caused a little bit of concern for the Brazilian corn crop right now, and helping support things, and also the bounce in wheat helped corn. So you ended up corn 2.5 higher in July, corn at 390, 2.25 higher. Dees corn 406.5. Beans are struggling in here. Spent most of the session lower. I think there's some ongoing World Trade Organization talks on these tariffs, and beans are front and center in that because China already said one of the retaliatory items on the list is beans, with a potential 25% import tariff on U.S. beans. So I think the bean market's a little bit nervous about that. We still managed to close higher, up 1.75 in July beans, 10.34, up 0.5 cent in new crop in November at 10.28 3/4. But they're definitely lagging a little bit here. So pretty quiet day. We'll watch this wheat. Maybe there's a low in the wheat market, especially if it's going to stay dry. Could easily see a bounce back up towards the recent highs in wheat, which you could take another 20 to 30 cents pretty easily if it's going to stay warm and dry for another 2-3 weeks out there.
Yeah. Okay, so what do you see? Cattle side of the business, looks like the stock market kind of took a hit today, so obviously the cattle market kind of follows that. So what are you seeing there?
Yeah, good strong day early on. 106.6 in the new live cattle. Couldn't hold it. Ended up the day just barely higher, 105.05, up 17. But obviously, what's that? A buck 62 off the highs. So not a great performance. Like you mentioned, the stock market getting beat up here has been down over 500. Probably at the time the cattle closed was 400 and some lower. So a lot of times that'll spill over, especially the cattle market. Kind of keeps an eye on the stock market. Probably didn't help cattle out. Still getting the sense, though, that cash trade this week is probably going to be steady at worst. And a lot of people think maybe we've got another this week and next week of firmer cash trade and probably strengthening box beef prices. So that should help give us a little bit of support and keep the cattle market from just totally imploding here.
Right on. Okay. Well, one last thing I wanted to talk to you about, too, because we hit it on about a week ago or something, when we talked about some oil prices and post the Syrian bomb strikes that we made. What are you seeing with the oil side of the business, and how is that structuring looking?
Yeah, oil has been pretty strong. It closed, still trading, but it's 85 lower right now off the highs of the day. Again, probably somewhat correlated to the weakness in the stock market here. Mm-hmm. There's also some news out that, earlier this week, President Trump tweeted about, OPEC maybe not playing fair. There was some news out today that President of France is kind of joining in on that talk. And so that's putting a little bit of pause in the market here. There's already talk that maybe higher gas prices are going to maybe spill over and negate some of the effects of the tax cuts. And it's always high oil prices, high gas prices is always a little bit of a drag on the economy,
right.
Both here and worldwide. So you may have, I'm not saying the high's in, but you may be getting close to, having the most bullish news digested here, barring any type of a flare up in the Middle East or, bombs going off somewhere. That's always a volatile component of the energy markets. But you may be getting towards the end of this run. I wouldn't be surprised if you don't see a little bit of a setback here, maybe a fairly significant one, $8 to $10, over the next couple of months wouldn't shock me at all in the oil market. But we'll just have to stay tuned on that. It's very volatile, political. That oil market always is a big mover and volatile.
Yeah. Well, good thing the president didn't tweet that much, so we don't have to worry about too much reaction from that.
Well, that's the new environment, man. You never know when a tweet or a series of tweets and at what time of the day or night are going to affect the markets.
Oh, I know, man. It's crazy.
So it's a new twist that we're not used to.
Yeah, for
sure.
So okay, man. Well, if guys want to get a hold of you and talk about this some more, how would they do that?
Yeah, best way. Number 9550.
Okay. You want to give that out one more time? You were cutting out on there.
I'm sorry. Yeah, our office number is 309-550-7213.
All right, that'll work. All right, Chip. So tomorrow we'll tune in at the same time, and till then, have a good one, buddy.
You too. Thanks, man.
Yep. Bye.